Hey everyone, and welcome back. You know that feeling you get when you get a letter from the IRS and it's like, not even tax season.
Yeah.
Not exactly a party invitation, right?
Right.
But what if I told you some of these recent changes might actually mean more money in your pocket? That's what we're diving into today, your personalized cheat sheet to navigating some pretty significant tax and healthcare updates.
Absolutely. And these articles really do provide a great overview of those.
Yeah.
Some recent adjustments from the IRS that might seem, I don't know, like just numbers at first glance.
Right.
But understanding how these impact your personal situation, that's where the real magic happens.
It's all about, making it real for you.
Exactly.
And that's what we're here for. So that's right. We're talking estate planning, tax brackets, and even those healthcare savings accounts, HSAs and FSAs that always seem, I don't know, kind of shrouded in mystery.
Yeah, a little bit.
Let's start with something that might seem a million miles away for some of us. Estate planning. The IRS is actually giving you more wiggle room when it comes to passing on your wealth. We're talking a higher estate and gift tax exemption in 2025. Now, I know what you're thinking. Estate planning. That's for millionaires, right? But here's the thing. This isn't just about leaving a legacy. It's about having more control over your assets while you're still here.
Right. And it's important to think about this, no matter how much you think you have, because it can change, right?
It absolutely can.
So you might find yourself in a different situation down the road.
And things change. Life throws curveballs, right?
Exactly.
What's fascinating here is the strategic possibilities this opens up. This higher exemption could actually allow you to gift more to loved ones during your lifetime, potentially saving on taxes down the line. It's like sneaking in a bonus present.
Yeah, it is. And it really highlights why it's so important to review your estate plan regularly, even if you don't consider yourself wealthy. Because a lot can change in a few years, and this way you're always one step ahead.
Always good to be prepared. Now, let's move from planning for our future selves to our present-day finances. With something that affects us all, those 2025 tax brackets, the IRS has released them, and the good news is they're going up. Generally, that translates to a little more breathing room in your budget. But let's break it down. We're not just talking numbers on a page. We're talking about your hard-earned cash.
Exactly.
One key change is the standard deduction increase. This is the amount you can subtract from your income before taxes are calculated, and in 2025, it's getting a nice boost.
It is.
For those who don't speak, tax form fluently,
Right.
This means a bigger chunk of your income won't be taxed at all. It's like getting a free pass on a portion of your earnings.
Exactly. Yeah, it's a good thing.
Now, this might also make some of you who itemize your deductions wonder if that's still the best move.
Right.
It's definitely something to, crunch the numbers on when you're prepping those 2025 taxes.
Yes, definitely something to look into.
Speaking of crunching numbers, let's tackle something that often feels like a puzzle, navigating healthcare savings.
Oh,
We're talking HSAs and FSAs.
Ah, yes.
Alphabet soup of personal finance. These accounts can feel intimidating, but trust me, understanding them could mean serious savings on those ever-increasing healthcare costs.
For sure.
It's like finding a hidden discount code for your well-being.
It is, yeah.
So let's demystify them. We'll start with HSAs, those health savings accounts that often sound, too good to be true.
Right.
Okay, so imagine a savings account specifically for healthcare.
Okay.
That's an HSA in a nutshell.
Okay.
And here's where it gets really interesting. Not only are your contributions tax deductible,
Right.
but the money grows tax-free. A&D, you can withdraw it tax-free for qualified medical expenses. It's a triple win.
Yeah, if you can use it, yeah, those are great accounts.
It's like a financial unicorn
Sure.
for healthcare expenses. But of course, there's always a catch, right?
There is.
You got it. To be eligible for an HSA, you need to be enrolled in a high-deductible health plan,
Right.
or HDHP. Think of it as a trade-off. Lower monthly premiums in exchange for the potential to save significantly on healthcare costs down the road. And here's the real kicker. HSA funds roll over year after year.
Yeah.
They don't expire like some other accounts.
Right.
You can even choose to invest those funds within the HSA to potentially grow your savings even more.
That's right.
It's like having a dedicated investment account just for your health. Pretty cool.
Yeah, it is. Yeah, and if you switch jobs,
Right.
no problem. You can take your HSA with you.
Exactly. It's your account,
Yes.
not your employer's.
Exactly.
Now, that's what I call financial freedom.
That's right.
So we've covered HSAs, but what about their close cousin, the FSA, or flexible spending account?
Right.
These accounts often get a bad rap for their use it or lose it reputation.
Right.
And it's true. Generally, you'll want to aim to spend those FSA funds within the plan year.
Right.
But there are some exceptions. With certain plans, allowing a small rollover or a grace period.
Right.
And remember, even though they might not have the rollover perk of HSAs, FSAs still offer a valuable benefit, pre-tax savings on eligible healthcare expenses.
That's right.
So strategically timing your contributions and spending can make a big difference.
It can.
It sounds like both HSAs and FSAs have their pros and cons, so choosing the right one really depends on, I don't know, your personal healthcare needs and your financial goals.
Exactly. It's about finding the right tool for the job, right?
Absolutely when it comes to maximizing your healthcare savings. But hold on, there's more. Remember those tax credits we mentioned?
Yes.
These aren't just boring numbers on a page. We're talking about potential money back in your pocket.
Right.
Especially for working individuals and families.
Yes.
One credit that really stands out, especially for those, working hard to make ends meet, is the Earned Income Tax Credit, or the EITC. This one's specifically designed to give a little breathing room to lower income earners. And the best part, the EITC amount is going up in 2025. This means more money back in the pockets of hardworking families.
It does.
What's really powerful about the EITC is, how much it can impact everyday life. We're talking potentially affording necessities like childcare, education, or even putting a little extra towards rent. It's about, making ends meet a little easier.
Yeah, definitely. And the credit amount can vary quite a bit depending on your income and family size. So it's crucial to, see if you qualify.
Right. What does that look like for you? Because it can be different for everybody.
Yes, exactly.
It's like a hidden treasure in the tax code.
Yeah.
Don't be shy about asking a tax professional if you think you might be eligible for the EITC or, frankly, any tax credits for that matter.
Right.
They can help you navigate the ins and outs and ensure you're not leaving any money on the table.
Right, because it can be very confusing.
It can.
Yeah.
Speaking of not leaving money on the table, did you know those flexible spending accounts, or FSAs we talked about, have even more to offer?
Oh, okay.
We did touch on using them for healthcare costs, but many employers also offer a dependent care FSA, specifically designed to help with those, often jaw-dropping costs of caring for a loved one.
Right, right.
For those who might not be familiar, dependent care FSAs are like a secret weapon for managing expenses related to caring for a child under 13 or a dependent who needs a little extra support.
Okay.
We're talking childcare, elder care, even those summer camp programs that seem to cost an arm and a leg.
Right.
And here's the music to your ears. The contribution limit for dependent care FSAs is also getting a boost in 2025.
Oh, wow.
More money you can set aside pre-tax. That's a win in my book.
Yeah, that is.
It's like having a little financial cushion, specifically for those essential caregiving expenses that can sometimes, I don't know about you, but they can feel overwhelming.
They can, yeah, especially if you have more than one.
Right, exactly. It adds up.
Yep.
And it just reminds us how important it is to really, comb through those employee benefits packages.
Yeah.
You might be surprised at the valuable programs you've been overlooking.
Absolutely, yeah. There's a lot in those that people just skip over.
Right. It's like,
Yeah.
HR, open enrollment. Okay, got to get this done.
Yeah, exactly. Just check the boxes.
But this is important stuff.
It is.
So far, we've journeyed from planning for our future selves with estate planning to navigating the present with tax brackets and healthcare savings. We've even uncovered some hidden treasures in the tax code with those valuable tax credits.
Right.
It's a lot to take in, but remember, knowledge is power.
Absolutely.
By understanding these changes, you're already ahead of the game.
Yeah.
Don't let these financial changes catch you off guard. Use this information to start planning, ask the right questions, and build a more secure future for yourself.
Yes, absolutely.
But buckle up, because our journey isn't over yet.
Right?
We've talked about the immediate future, but remember those CNBC articles we mentioned?
Yeah.
Well, they also hint at some potentially big changes coming down the road after 2025.
Okay.
This is where things get really interesting. Remember the Tax Cuts and Jobs Act of 2017?
Yeah.
The one that felt like a whole new language we had to learn?
Right. Oh, yeah, the TCJA. I remember feeling like I needed a decoder ring just to understand my tax forms that year.
Totally. Well, get ready for round two because many of its provisions, including some of those favorable tax cuts we've been discussing, are set to expire at the end of 2025.
Oh, okay. So some of this might be kind of temporary then.
It very well could be, yeah.
Okay.
Yeah, so all these changes we just talked about, they might not even stick around.
Wow.
That's the million-dollar question, isn't it?
It is.
It's like trying to predict the weather 5 years out.
Right.
We're potentially looking at a completely different tax landscape in 2026, which definitely makes planning for the future a bit of an adventure, I'd say.
Right. Yeah, definitely.
So I'm starting to feel that, like, letter from the IRS feeling again. Should we be panicking? What can we even do?
Well, I hear you. But honestly, the worst thing we can do is kind of bury our heads in the sand, right?
Right.
Panicking won't help, but knowledge will.
Well,
right?
absolutely.
So understanding, educating ourselves about what might be coming.
Information is key. So what should we be, watching out for as we approach this, like potential fiscal cliff?
Right. Well, one major area to kind of keep an eye on is what happens to those individual income tax brackets.
Okay.
If they revert back to pre-TCJA levels, a lot of people could see their tax bills go up.
Okay. That's definitely something I don't want to be surprised by. Are there any other, areas of concern?
Yeah, and it's not just individuals. The corporate tax rate, which also got a significant cut under the TCJA, could revert to its previous higher level, and so that could have ripple effects throughout the economy, potentially impacting business investment and even job growth.
Okay, so it sounds like a lot hinges on what happens with these TCJA provisions. What are the chances they'll actually expire, do we think?
Honestly, it's a bit of a waiting game at this point.
Okay.
The fate of these provisions will likely depend on the political climate and economic priorities at the time.
Which, as we know, can be about as predictable as, the weather.
Exactly.
Right.
Yeah, it is.
And that's precisely why being informed and adaptable is so crucial.
Absolutely.
We can't control the future,
Right.
but we can control how we prepare for it.
Exactly.
So what's the best way to, weather this potential financial storm?
Well, I think it's all about being proactive.
Yeah.
So, review your finances regularly, explore different scenarios, and don't be afraid to, call in the reinforcements, right?
Yeah.
A financial advisor can be a lifesaver when navigating uncertain times.
Absolutely. Have someone in your corner.
Yes, exactly. Because they can help you kind of think through, what if this happens and we do this, or what if this happens and we do that?
It's all about having a plan,
Right.
being prepared. Well, we've covered a lot of ground today, from estate planning and those sometimes confusing healthcare savings accounts to the ins and outs of tax brackets and even potential shifts on the horizon. We've truly gone on a deep dive into your financial well-being. But remember, it's not about memorizing every single detail. It's about, arming yourself with the knowledge to make informed decisions for your future.
Absolutely.
It's about taking charge of your financial journey, asking the right questions, and planning for a brighter tomorrow. And on that note, this deep dive was crafted just for you. What resonated most? What questions popped up for you? Keep that curiosity alive and never stop exploring your future self. Well, thank you.